Hey, what's up, guys? Today we're going to be talking about what is involved with the real estate transaction, who's involved, and what steps you have to take to be a homeowner. Homeownership, it's a great feeling when you own a house, but there's a lot of things involved in that. So we want to teach you the steps, and we want to teach you who's involved, who should you hire, why you should hire that person, and let's get started with them. Okay. So first we have our sellers and buyers. Seller is going to be listing the property. The buyer is obviously buying the property. You as a buyer, we're going to pretend this video that you are a buyer and what you have to do to protect yourself. Okay. Which companies that you should work with, which real estate agent you should work with, which loan officer you should work with, attorneys. There's a lot of people involved and they come in at different stages. You would not need an attorney in the beginning stages. You do need an attorney when the contract time comes, right? So buying a house is a tough decision. So in 2023, a lot of our buyers or wannabe buyers were simply not ready because of the high interest rates. The interest rates were so high, around 8.03 is the highest that we have seen. And a lot of people were saying, hey, I just can't afford the mortgage payment. If they can't afford the mortgage payment, what's the point of even looking for a property, right? So you want to make sure that you can afford the monthly payment, you have a steady job, and it's going to be a big responsibility that you're purchasing a house, and we want to get it right. The last thing that we want is that we don't want any foreclosures. We don't want any short sale. We don't want you to go through bankruptcies. So you want to make sure that you're making the right decision. One of our main questions, or the biggest question that we get, is that should I get a cosigner? Could I add a cosigner to my deal here and make it happen? Yes, you can add a cosigner, but adding a cosigner is a big responsibility for that cosigner as well. If they're attached to your mortgage and you stop making the payment, their account or their credit scores will get hurt as well. And if you want to remove them, let's say, hey, your friend is helping you out, or your sister or your brother, a family member is helping you out with the mortgage, it's going to be a big deal for them too. Okay. So it's a big, big responsibility. Make sure if you are going to get a cosigner, their credit scores are good too. So it cannot be just their income, but their credit scores have to be good as well. Okay, so just be careful when you're adding anyone to be a cosigner. Big responsibility. Let's just say that things don't work out between you and the other cosigner, and you said, "Hey, let's sell the house." Guess what? The other person have to agree to it, right? So when you wanna have a cosigner, choose wisely. Make sure you trust the person. Make sure it's a family member that can help you in the beginning stages. But when the time comes to remove them, you can easily remove them. Okay? So be very careful when you want to add a cosigner. Next, guys, I want to talk about here is your pre-approvals. If you have a pre-approval last year, just get a new one. Okay? You're going to qualify for a little bit more. As we mentioned, the interest rates were around 8%. Now they're coming down to around 6.5%. So you're going to see more changes, right? So just make sure you're keeping an eye on your mortgage interest rates. One great website that you can do this on is called Mortgage News Daily. Mortgage News Daily is a great website where it shows you the national averages. So this way you can have a good idea what the mortgage rates are as of today. Okay, so I'm going to show you that in a little bit as well. So we're pretending you are a buyer. Hopefully, even if you're renting right now, you should make a goal that, hey, in 2024, I want to buy a house. I want to have enough down payment, enough closing cost, and I want to have make that move this year. You should not buy a house if you're going to live there for a short time. If you're not too sure if you're going to be in that community or in that neighborhood for long time, then don't make that move. Then just rent out for a little bit, not a problem, right? Your point should be that, hey, I'm going to live in this neighborhood for quite some time. I'm comfortable. I have a good job. My kids are going to school here. So why not purchase it and let my equity build, right? A lot of people get equity wrong. So equity is your profit that you have in that property. Because when you're buying the house, let's say you're putting 10% down. How about the other 90? The bank is paying that other 90%. So that other 90% is coming from the bank. So the bank owns that house. As much as you do, they own the same way. So if you want, once you have paid off the mortgage, then we have a different story. Until then, you and the bank, both of you guys own the property. That's the reason they have a short sale or foreclosure process. If you stop making payment, you have to tell the bank, hey, I have a hardship, I have a problem that I cannot make these payments anymore. So they will take over the house, right? So a huge responsibility when it comes to that. Next, guys, I want to talk about working with a real estate agent. I'm a broker here. We have plenty of agents, around 70 agents with our brokerage. We highly recommend that you work with a real estate agent to protect yourself. Do you really think that listing agent, the agent that's representing the seller, is going to have your best interest? Absolutely not. Simply put, they do not, because they will have the best interest for their client. Their client was the seller. Remember, they both they listed the property saying that, hey, I'm going to list this property and I'm going to sell it for the best price, Mr. Seller. I'm going to get you the best price. How come that person is going to be loyal to you now? It's just not possible. So have your own agent. Work with your own agent, okay? That's going to represent you and have your best interest. You don't want anyone else. That person, he or she is going to show you the properties, is going to negotiate properties, and is going to guide you all the way, right? It's just not one thing they're doing. They're going to be doing a lot of things in order for that transaction to complete, okay? Should you pay them any commission? I would simply put, if my agent is getting paid from the seller side, then I should not be able to pay them. Or I should say, hey, at least I'm not paying you. You should get paid from the seller side. If your agent is not getting paid, and if they're asking you, then you would need to pay them. But it's all negotiable. Every commission deal that you have, they're all negotiable. So if you have a real estate agent that tells you, hey, I need to get paid X amount, speak to a different one and see what they say. The cheapest one is not the best one always. You know that if you're a professional real estate full-time agent, you're going to ask for commission, even if you're on the buyer side, especially when they're not getting paid from the listing side. There's a whole lawsuit going on right now in the United States, and we will see the outcome in a few more months. But until now, just know that everything is negotiable. Okay? So your pre-approvals are very important. Make sure you have the most up-to-date one. You want to find a property with your real estate agent. How about if you have your own alert set up on Zillow, on Redfin, or any of these other websites? It's perfectly fine. You and your real estate agent have the same goal. Both of you guys have the same goal to find you a property that you like, the property that you're going to be comfortable living there and building some equity down the line. They will do all the research for you for the neighborhood. You can do the same. Maybe if you are in a neighborhood and you don't feel too safe, you should not move forward if you don't feel too safe. Because especially if you don't feel safe, maybe your kids won't feel safe. So you're going to make the right decision. So you should drive by those neighborhoods, right? Go off hours, go in the evenings and see how the neighborhoods are, and then move forward. Okay? The schooling system. There's enough websites out there. There's enough tools that the real estate agents have that can do all this research for you. You don't want to be in this area. You want to be in this area. Let me do the research for you. You can really put your real estate agent to work when it comes to this part. This is what you're really using them for, right? To make sure that you're making a right decision by hiring a right real estate agent. Okay? And ask them a couple of questions. How many deals have you done? Which area have you been serving? You don't want to hire a real estate agent that have to travel 30 miles or 40 miles to be in that neighborhood or an hour away. You don't want that. You want someone that's going to be local in that community or in that market that's going to help you out. Okay? So hire wisely when it comes to real estate agent. Next, you have your loan officer. A lot of people get confused. Hey, I got this pre-approval from Mr. X. Can I go to Mr. Y or Z or someone else? Absolutely. You should do that. You're going to get a mortgage. You're going to get a big responsibility. Maybe the guy is a really pleasing guy, but he could be a con artist. How do you know that? By comparing that. Hey, you're giving me this interest rate, you're giving me these fees. Everything is listed on loan estimate. If it's listed on loan estimate, let me compare that. Let me compare that with other loan estimates. So let me go to a different bank or different broker and ask them, what do you have to offer? Right? The government wants you to make the wise decision. How are you going to do that? By shopping around. You're not stuck with one loan officer. You can shop around with different one. The tricky part is that some loan officer will do a hard pull credit on your credit right away. You should not allow them to do that. Your conversation should start, hey, Mr. X, hey, Mr. Broker, I know you're a loan officer. I need a pre-approval. Can you give me a pre-approval without running my credit? He's going to say, no, I need to do at least soft pull. If they're doing soft pull credit, okay, fine. It's not going to hurt your credit scores. But if they say, no, I need to do a hard pull, tell them, hold up, wait a minute. I don't want to do a hard pull right now. I'm not ready. I'm not even ready to buy right now, right? I'm just thinking about buying. So how come can you do a hard pull on my credit? No, no, no. We don't want that. Okay? So you want them to do a soft pull credit if possible. If they say, no, I don't have that option, then go to another loan officer and see what they have to do. Okay? What they have to offer there. So make sure you work with the loan officer that will do a soft pull credit and give you a pre-approval letter. And we all know that you're not going to love the first property that you see. Maybe the second. Some people don't even like 20 property they see, 30 properties. It's perfectly fine. I don't judge them. I never judge them because they're buying a house and it's a big deal. They want to get it right. Right? They do have some regrets. Hey, I missed out on this. I missed out on that. I missed out on this. Hey, guess what? It was a learning curve. They got that right now. Hopefully, they will make the right decision down the line. But even with those mistakes, it's perfectly fine, right? It has to be their decision. They're the one who's purchasing the house. They have to say, yes, let's go. I want to move forward. I really like this house. Okay? Nobody should be forcing you to buy any house, especially in any market. So make sure you work with the loan officer that will give you a pre-approval letter without running your credit. It should be a soft pull, if anything. Okay. And another thing is that when you are in the application, maybe some of you guys are already under contract, and please, please, please do not buy a new car. Do not purchase anything big that's going to affect your credit scores or your debt to income. Right? You have your income that's steady. Hey, I'm making X amount of money. But now if you are doing it, you're buying a house and you're also getting another car, that's going to affect your credit scores and is going to affect your debt to income ratio. Okay? So please do not make any big purchases when you are buying a house. Okay? You're already doing a very big purchase, which is a house, right? You're buying it for $500,000. Big deal. Just don't buy another car. That's the biggest thing that we see. Hey, my family needs to upgrade my car. When should I do it? You should do this after the closing. Closing already happened. Now let's do it after that. Okay? Next, guys, is going to be your home inspector. Home inspector comes in as soon as you hear the words, your offer is accepted. If your offer is accepted, you should inspect the house now. You should see, like, obviously you went there, you saw the open house or you saw your private listings there, right? But you don't know what's going inside that behind these walls, right? Behind these walls, maybe there might be some big issues, structural damage that you cannot see. The home inspector's job is to find all these flaws. They're the one who's going to say, hey, yes, this property has this many issues. It's your decision if you want to move forward or not. Right? Some people say, hey, how about if the inspection has so many flaws and it's a deal breaker? It could be a deal breaker, but guess what? It made you make the right move. Right? You don't want to buy a house where the house is going to go downhill or is going to have some sort of damage or it collapses, after, you move in or even years in. You don't want that. You want a nice house that does not have any issues. If it does have any issues, you want to negotiate. This is why you're paying this. We have seen it many, many times where the inspector says, hey, there's 10, 20 different things that's wrong with this property. Then your real estate agent is going to take that list to the listing agent. Hey, I know you are accepted our offer at $200,000, but look right here. We got a big problem. We have the whole roof is so old that it's going to go downhill any day. The leakages are there. The structural damage is there. We need to renegotiate. If they need to renegotiate, it's going to bring the price down and it's going to be in your favor. We have seen it many times where your home inspection might cost you $500, but it saved you $5,000 when renegotiating. So always, always do your home inspection before you go under contract. Okay? You don't want to go under contract without knowing what is wrong or right about this property. Okay? And it's basically checking your property's condition and making sure it's safe to live there and there's no issues with the property. If there are issues, you should know that, hey, the boiler needs to be updated. The roof needs to be updated. The electric, panel that is there is super old. It might be, it needs updating. So there could be a lot of things that needs updating. Okay. Next, guys, is your attorney. We have seen it. The attorney should be picked by you. You should be the one who should be picking your attorney, not anyone else. If your real estate agent says, hey, I recommend an attorney, first see if you have any options. If you have your options, you know which attorney that you want to go with them. Simply put, do not go with the attorney that the listing side is giving. Anything that the owner is providing, you should not go with them. Why? Because they might not have your best interest. So you want to make sure that someone who's representing you is going to be the person that's going to have your best interest. So your attorney can save you thousands and thousands of dollars making sure that you're protected, right? So when you're signing the contract, you're not just signing the contract, you're also putting some money down. That money is called earnest deposit. That money, how safe that is, it all depends on the contract and the attorney that you hired, right? Let's say you want to back out for some reason. You're maybe a month into the deal and you cannot get the mortgage and you want to back out. Simply put, if there's a paragraph in the contract that you need a bank commitment letter, then you're safe. You didn't get the commitment letter, all of a sudden you can back out and maybe you can get your money back. But there have been so many times where that contingency, that line is not there, then you can lose that $5,000-$10,000 that you put on the contract, right? So when it comes to the contract and putting your earnest deposit down, you should not put more than $10,000 to $20,000. There have been listings where it's $1 million property that the listing agent simply says, hey, no, we need to put down at least $50,000 on the contract. It's a lot of money, so you as a buyer should speak to to your attorney, your real estate agent, and try to negotiate down much as possible. You don't want to put a lot of money and jeopardize your thousands of dollars, your savings on the contract. So you're putting a little bit of money on the contract. Rest of it you're bringing at the closing table, your down payment. Just make sure that you are aware it's down payment. That's the money you're putting down. On top of that, you need closing cost. Your closing costs are typically 3 to 5% on top of your down payment. So you have your down payment, let's say it's 10%. On top of that, you also have your closing cost. That closing cost is going to cover things like your mortgage loan officer's origination fees, your title report, right? It's going to have your home insurance premium in there. It's going to have every cost that you need to know. It's going to have a line by line on your loan estimate, right? So that's why we said maybe one person might say, hey, we'll give you 5% interest rate. Even though you know the market right now is at 6.5, how could they give you? Maybe they're giving you by buying down the interest rate and not telling you that. That is completely illegal. They should give you a loan estimate and disclose that. Hey, I'm giving you 5.99, I'm giving you 5.5, I'm giving you 7.5, whatever interest rate they're giving you. If they're buying down in their system, you will see it on your loan estimate. So you want to make sure that you are seeing that and comparing that on your loan estimates. Okay. So guys, when it comes to attorneys reviewing your contract, just remember one thing. One line can cost you thousands. So just be aware when you have an attorney, make sure they know what they're doing. Another thing is that on the contract is who's gonna pay your transfer tax. In your area it might be 0.5%, 1%, 1.5%, 2%. Is different by the counties. But guess what? Seller should be paying that. Seller should be paying the transfer tax, but it's all negotiable. Let's say on the contract it says the buyer is going to pay the a transfer tax, or the listing agent put that on the listings itself, but your buyer's agent ignored that. That's a big problem. It's going to cost you thousands of dollars for your transfer tax. So you want to make sure that the transfer tax is paid by the seller and not you. Okay? So these are the things that you can protect yourself with, and make sure you are aware of these things when you're signing your contract. Okay? Any questions any of you guys have, just put in the chat box. We are on all social media platforms right now, so you guys can just put in your message there and I can take a look at it, right? Okay? So after your attorney is hired, you have your contingencies, everything's in the contract, you are reviewing it. The next thing you're gonna do is gonna be your appraisal. Now your bank is gonna hire a third party for appraisal. They're going to check that the value that you're putting in, the price you're saying that, hey, this property is worth, I'm saying that I want to buy this for $500,000. Now the bank, they're going to send out an appraisal there. One person that's going to inspect the property, make sure, number one, that it is in a living condition, right? It's a livable condition, that there's no issues, that you can actually live there. Number two is that they're going to measure the properties inside the house. They're going to measure all the bedrooms, right? The size of it. And then that person is going to compare that to all the other properties. Remember, you have your own real estate agent. That person did the same thing to get the value for this. So let's put in this offer because I did my comps. Now the appraisal is doing the same exact thing for the bank. So he's going to tell the bank, yes, here's the appraisal report, and this is what I think the value is. If the person says, hey, the value is $500,000, you're putting $500,000, there's no problem. Sometimes you get the appraisal report has higher value. Hey, you're buying it for $500,000, but guess what? We think it's worth $550,000. If that's the case, that's a beautiful thing. That means you are already getting a good deal, right? Your bank is saying that you are getting a property at this price, but we think the value is more, so you have more equity. That's a good sign for you. Okay? But on the other hand, if it's less, what are you going to do? Who's going to come up with that difference? Let's say they are off by $20,000. The bank says, no, this value is only worth $480,000. You're buying it for $500,000. Where are you going to bring that $20,000 more? If you have $20,000, you really like the house, okay, that's fine. But guess what? Not everybody's have $20,000 laying around extra, right? Then who's going to protect you? Your attorney and the contract. If the contract had a bank appraisal contingency in there, then we have no issues with that. Okay? So you want to make sure that we are protected, you are protected with them. Okay. Next is going to be your title company. Your title company is going to be hired by your attorney. Your attorney should hire the title company, and they're going to check the chain of ownerships. They're going to make sure that there's no issues with the property. There's no issues with the ownership. You don't want to buy the house, maybe a month later, a year later, someone knocks on your door and says, "Hey, hold up. This is my property." Right? If they say this is my property and you say no, this is my property, how could you be sure? It's going to be a court case, right? If someone is claiming that this is your property, your title company is going to give you title insurance only after they have a clear title, meaning that there's no issues with the ownership. They know that, hey, this person who is selling you the property is the true owner. Okay, that person does not have any bankruptcies, does not have any issues along the way. Okay, next guys, we want to make sure you don't have any liens or violations open. We go through this from time to time where we have some clients and they say, hey, how could I know that this property has any violations? In the beginning stages, you do not, because nobody's doing this search for you in the beginning stages. This usually comes later on, which is perfectly fine, right? So you want to make sure that you are protected with this. Okay. How are you going to be protected? Through a clear title, through your title company. Okay. Next, guys, is going to be your surveyor. This person is going to survey your property. He's going to check the boundary lines, everything that's around on that lot size. If you are getting a lot size, let's say 40 by 100, 50 by 100 lot size, 40 by 100 or 50 by 100 lot size, then you're going to make sure that this person is going to make sure that it is the correct size. The last thing that you want is that, hey, after you buy the house, that you have a fence that's going and the fence is more towards the left or towards the right and is leaning to your neighbors. You want to fix that before your closing. You don't want any surprises. You don't want any of that nature after the closing. It's going to be hard for you to go negotiate after the closing. Okay? So have your real estate agent work with the listing agent and get that fixed before closing. Right? So how much is the survey? Typically $500 to $700 here in Queens, New York. Your area might be different. It's very important that you get that. Okay? That usually comes towards the closing, towards the last stages. Next, guys, you have your insurance agent. This person would come in towards end of that when you're about to close your deal. It has to happen before the closing, but you don't want to hire a real estate agent all the way in the early stages because you don't know if you're going to close on that deal or when you're going to close on it. You can get your price quotes from different agencies. You can call Geico, Progressive, other companies out there. That's not a problem, but you want to shop around and get a home insurance price quote. And when the time comes for the closing, you can make sure that you go with the lowest price with the highest coverages and make sure you are covered. This insurance policy is going to protect your house from fire or any of the other things that's going to be included on that insurance policy. Okay, that policy for a single family, you're looking at around $1,500 here in New York, give or take. Okay, so it's super important. Your bank will require that you have home insurance. Guess what? You don't want to buy a house where it burns down after a month or so. You have this huge mortgage and you don't have any insurance. You're paying insurance for maybe $1,500, but it's going to protect your $500,000 investment. Okay, so it's very, very important that you have your home insurance. All right, guys, any questions, any concerns, let me know, guys. But just make sure that when it comes to the beginning stages, that you have your budget right. You have to budget, know your budget, and see how you're gonna actually make this happen, right? So when we mentioned your savings, right? This save, you don't want to use up all your savings either. There's a lot of people who say, hey, I have, $67,000. I want to use all $67,000 for my down payment. No, you got to divide it. First, know that how much money you need for your down payment. You need to know how much money you need for your closing cost. Who's going to tell you that? Your loan officer. Your loan officer is the one who's giving you a full breakdown. Hey, if you were to get a loan with us, you're going to pay these fees. Then you should go to a next loan officer. Hey, what are my fees going to be? And then compare them. Okay. Typically, there should be enough programs for FHA, for conventional, where you can put down between 3 to 10% for your down payment, and that should not be a problem. A lot of people think that I need 20% for conventional loan. You do not. There's enough banks out there that will give you conventional loans, but you can put down less than 20%. Okay? On top of that, your closing cost is going to be typically between 3 and 5%. Okay? So know how much you can afford and how much you want to actually use that for your property. Next, guys, let's talk about your credit scores. Credit scores are super, super important. So looking at here, if you guys on YouTube, you can see it here. If wife has these credit scores, so the companies where the banks work is that they don't look at two credit scores, they look at all three companies. So if you have Credit Karma or any other websites that you're using for your credit check, they usually give you one or two different companies. But when we as loan officers, we're checking this, we're seeing it all three of them. So they always count the middle score. So you can see for wife here, one of them, she has her credit score 718, one of them 725, and one of them 739. Guess what? They're going to use the middle one, which is 725. But that's the wife. Now, if the husband wants to come in, if the husband credit score is lower, they're going to use lower credit scores, right? So point here is that let's say you want to get an FHA loan or you want to get a conventional loan, and whatever that loan program guidelines are, both of the co-signers have to fulfill that. Both of them have to make sure that they can actually get that loan based on their guidelines. Okay. So just know that if you're going to add a co-signer, the co-signer has to have good credit scores as well. You just can't get someone with good income but no good credit scores. Credit scores matter a lot. Okay. But if any of you guys trying to buy a house in 2024, it's a great decision to make. It's a tough one because there's a lot of naysayers out there. A lot of people say, hey, you should wait. It all depends on your situation. But if it comes down to it, you want to purchase a property, this is the time to do it. Okay. Because there's not a lot of competition right now. There will be more competition as the interest rates are dropping. Right? Simply put, we will have more competition when there's more people trying to purchase the same property as you are. Okay? That's what we're going to see in 2024. All right, guys. So let me know if anyone has any questions regarding this so I can help you guys out. If any of you guys are under contract, we had someone that just bought a house and was thinking about refinancing. I would highly recommend that you guys, depending on your situation, if you bought the house last year, you should wait until end of this year in 2024 or at least middle of it and see when the interest rates keeps dropping. Once they start dropping to even in fives, then it will be a wise decision to do so. You don't want to do it right now and then they come down even more and then you regret, hey, why didn't I do this? Right? Why did I do this a couple of months ago? Why not do this later? But just know that the Fed now, the government will do 3 cuts, right? That's what they announced, that in 2024, this year, they will have 3 cuts. We don't know when they will do that, but just know for sure that we will have those cuts. I think that, they stopped hiking because they have seen enough. The inflation rate right now as of, November was 3.14. So the interest rates are coming down because the inflation rate is coming down. That's what the government is following. So the Fed said that they will have 3 cuts. Hopefully they will have them sooner than later and it will have a good effect on you guys. So as a buyer, you can easily make your decision to purchase a property. Okay. Guys, any questions, concern, just let me know. Okay. All right, guys. Next I have here for you is this is your national averages as of this morning here, that the interest rates were for 30-year fixed rate 6.75 was your national average. This is for people who have credit scores above 700, looking for a single family, putting down 20% down payment. They're getting this rate. Can you get this rate? Can you get better rate? Will you get worse rate? All depends on your situation. Depends on your credit scores. Depends on what type of property you're getting. Is it single family? Is it multifamily? There's many factors comes along when it comes to your mortgage rates. Again, you want to compare with different banks to see what they give you. You should not be locking your interest rate right off the bat. You should lock your interest rate towards end of it when you're about to close on your deal. So this way you know what the interest rates are, because they're going to be locked in for maybe 30 days, 45 days, sometimes just only 15 days. Okay? So you want to make sure that you know what you're doing when it comes to locking your interest rate. Some of our clients here, when they look at this chart here and they say, hey, how come FHA's national averages are 6.16 and our conventional are 6.75? Think of FHA as like a helping hand. The government wants to help out people with lower credit scores so these guys can, be a homeowner. But FHA has pros and cons, right? You should be aware of these. You should compare your loan estimate. One maybe can be for a FHA loan. One of them could be for a conventional loan. And you can see what your costs are and see if you want to actually go ahead and go with conventional or FHA, right? It all depends on you. So guys, when it comes to conventional loans, they are good because your mortgage insurance goes away automatically after you hit 20% equity. But for your FHA, it does not. It really depends. If you put down less than 10%, it never goes away. If you put down 10% or more, then it goes away after 11 years. It's a long time. 11 years is a long time, right? So you want to make sure that if your FHA mortgage insurance is going to go away after 11 years, should you really be going with the FHA or conventional, right? Some people simply don't qualify for conventional because their credit scores are not what the bank is looking for. Most banks would want to see 620 credit scores, 620 or above for conventional. And for FHA, majority of them would want to see 580 or above. So let's say your credit scores are 585 or 590, then you simply don't have any other options. You simply need to go with a FHA. You cannot go with conventional. So every situation is going to be different. So see, what is a good option for you. Okay. So this is everything is in a nutshell, guys. Right now, I will see you guys next week with more details, more process. We'll go through some HELOCs. But any questions, concerns, just shoot me a message or just Google us on LJ Realty Team or LJ Mortgage Team. I hope this helps you guys. You guys take care.